CNBC TV 18, celebrating 16 years of business leadership.
Welcome back. It's flat for the market now. The story's been really in individual mid-caps today. That's where we have seen bulk of trading action. But let's talk about the overall market scenario and some stock picks. Sreesankar, Head of Institutional Equities at Prabhudas, Lilladher, is with us. Sreesankar, good morning. So the Fed event is out of the way. Does that change your view at all, or do you still maintain your big bullish target for next year?
No, we still have our view firmly in place, and I don't think that any change is going to be there immediately. The great thing is the uncertainty is out of the way. Whether the rate hike will happen or not happen, that was an uncertainty for quite some time. And the 25 bips hike is effectively taking it out, and the commentary that has followed. So it's very clear that therefore we will be following the economic numbers much more strongly in terms of inflation, in terms of growth, in terms of unemployment, etc. So the next event or next action will depend upon how these numbers turn out to be.
Okay. Well, Sreesankar, let's talk about stocks then. It's a little too early for earnings, but nonetheless, we have the INFI date, which is out on the 14th of Jan, and that's less than a month. We've already seen, revenue warnings come in from the likes of TCS and Wipro with regards to what happened in Chennai. What is your expectation from the IT space this time round in terms of earnings and hence valuations?
See, it's too early for me to talk about the Q3 numbers per se, what's our expectations at this stage. But having said that, a couple of factors out there. What we believe as a house is, every player who has got his what do you call the offshore centers in Chennai is invariably going to get impacted depending upon how much people are there, and a certain impact in terms of revenue and consequently on the margins are definitely going to be there. Now, that's not going to change the view on the IT sector. We see it as a one-off event. And in many cases, what we also understand is some of the companies are actually working on Saturdays or else, etc., to compensate for the loss of work, the loss of work that had happened due to the rains. Okay, so it's not going to fundamentally change the view that we have. But having said that, yes, that's something needs to be taken on board. Second half for IT companies is not necessarily the good period, and especially the third quarter is quite a weak quarter. On top of a weak quarter, if you have an event like this, the impact can be a little more sharper. But our view on IT still remains strong as US continues to grow. The growth in many of those sectors, energy is one sector which has not seen growth and which has been under pressure. Yes, and that's already discounted in the performance of many of those companies and performance of that particular vertical in many of the companies.
Okay. Among your top picks, you have the three of the biggest banks, Sreesankar: HDFC Bank, ICICI Bank, and State Bank. And all these three stocks haven't done much for investors. In fact, ICICI Bank has destroyed quite a bit of value this year. What makes you bullish at these levels?
We like the valuation at those ICICI Bank at those levels, and we think and we believe that ICICI Bank and among the private sector banks, our preferred pick has been, if you actually look at it, we have had HDFC Bank consistently in the preferred pick. We had IndusInd Bank in the preferred pick because of the prices being steeper, or rather price targets being achieved, and also the fact that we believe that incrementally there may be some cost pressures coming in, etc. We have actually removed from IndusInd Bank from the portfolio. Then we have, we do not like the public sector banks. We have, among the public sector banks, we think State Bank of India is the best bet. So we continue to believe on State Bank of India, and the valuation looks much better. And so is the case with ICICI Bank among the private sector banks, purely on the valuation growth that we have. So we continue to like that space. Even the financial services is a space that we like, and we believe that we are overweight financial services, number one. That probably might not have worked in the last month, etc. But we continue to have a view that economic recovery and the growth in financial services is going to be sharper. Having said that, when a lot of events like NPAs, trust assets, some of the large corporates having a trust assets, its impact can have a negative bearing on the stock prices in the short term, and that's what we are seeing in the stock prices as well.
Okay. Sreesankar, there was some positive news on Aurobindo. They received another US FTA approval. I understand that you look at this stock, it's one of your picks. Tell us about it.
We continue to like Aurobindo. Aurobindo has been in part of our topics for better part of 1 year and more than 12 months. It has been consistently in the topics. Apart from Aurobindo, we also have Glenmark into the topics, and so we continue to Glenmark and Jubilant Life Sciences. We like all the three, our analysts like all the three, and we consequently like all the three, and we believe that all these stocks are going to continue to deliver strong returns over a period of time. Having said that, you might have seen bouts of huge outperformance in case of Jubilant and Glenmark, and then in many of these stocks there may be a period of underperformance. Probably Glenmark is undergoing that, but we still feel optimistic on both all the three, Aurobindo, Glenmark as well as Jubilant.
Okay, let's talk about some of the mid-cap stocks then, Sreesankar. You're bullish on a couple of logistic names. I think VRL and All Cargo. Are you not worried about the fact that the GST is now getting postponed yet again? And what's your premise for buying some of these stocks now?
Anuj, there are two factors when we look into the entire logistics pack. GST is, to our mind, it's only a bonus. First, the fundamental business has to be pretty strong. And when I look at All Cargo again, it's a global part of the business. Consolidated entity has got a global business. And we believe that All Cargo should have a cash generation of closer to 600 crores over the next 2 years. And it should be a debt-free company. Their project and engineering services business, which has been a drag earlier, are rather poor returns in terms of capital ratios, has been starting to give a better return. That's number one. Number two, their strong cash generation should effectively make it into a zero debt company unless they go for an expansion or an acquisition or something of that nature. So it should be a net cash company in the current year. That's one big positive. Second, if I look at the kind of EXIM trade, exports are not doing well, and on the CFS side, 96% of their revenue comes actually from imports. So that as long as imports continues to do or be on the higher side, yes, growth volume may stutter, but we still continue to believe that strong cash generation will happen from there. Third, coming back to VRL, we fundamentally like that business. The business throws in a ROE in excess of 25% plus, and this company has done its major capex already, and it's in a space where 85% of the business is in the unorganized sector, and you continue to see this company going forward, expanding, and for that incremental expansion, I don't think they need further equity raising, etc. Their cash flows can meet the capex that they are continuing to do. We like that business, and as and when GST comes, it's a bonus. So that will be the bigger kicker.
Okay, fair enough, Sreesankar. We're going to leave it on that note. Thanks very much for joining in and speaking to us. Well,